Nightly Business Report.
Good evening. Tonight, following a 70% increase in living expenses 2 years prior, consumer prices in the Colombo district decreased in February as a result of reductions in electricity tariffs and an easing of food prices, notably those of rice. A robust rebound is seen in Sri Lanka's tourism business, which generated $400.7 million in January of this year, a 17.2% increase over the same month last year. After the strong momentum from the previous week, the Colombo Stock Exchange concluded the day lower. The S&P SL20 index and the All Share Price Index both saw notable drops, suggesting cautious investor sentiment. And according to analysts, Adidas' success this year depends on luring more American consumers away from Nike as the company looks to expand beyond its well-known Samba and Gazelle sneakers.
From Studio 24, here's Sanuvi Mudanayaka.
Good evening and thank you for joining us. Electricity tariff cuts and easing food prices, include rice, led to a drop in consumer prices in Colombo district in February, offering relief after a 70% surge in living costs 2 years ago.
Consumer prices in the Colombo district dropped by 4.2% in the year throughout February 2025, accelerating from January's 4.0% decline. This marks the sixth consecutive month of deflation since September 2024. Monthly prices fell by 0.2%, largely due to a sharp decrease in non-food prices driven by electricity tariff cuts. Food prices saw a slight 0.3% increase on a monthly basis, with some staples like rice easing, while fresh fish and potatoes became cheaper. Non-food prices dropped by 6.1% year-on-year and 0.5% month-on-month, mainly due to lower electricity tariffs. Core prices, including volatile items, rose by 0.7% annually, slowing from 1.2% in January. The central bank expects deflation to continue into the first quarter of 2025, with inflation projected to rise to 5% in the second half of the year. However, inflation is expected to temporarily exceed the target by 2% in the second quarter of 2026. These developments highlight the ongoing economic adjustments post-inflation surge.
The Petroleum Distributors Association has raised concerns over the government's plan to transfer CPC-owned filling stations to foreign companies and protested a reduction in their 3% commission. In response, Lanka IOC fuel distributors have halted orders, citing financial losses due to CPC's market influence. Despite these protests, the Ceylon Petroleum Corporation reported increased fuel distribution on the 1st of March, with supply levels doubling compared to the previous week. CPC chairperson J.A. Rajakarna assured that distribution was functioning normally with no expected supply issues. He also claimed that the new formula for fuel distributors would offer greater benefits than the previous 3% discount. However, distributors are planning to discuss the situation further with the government and CPC to resolve ongoing concerns. Opposition leader Sajith Premadasa criticized the government for its lack of a clear plan to address these issues. Sri Lanka's tourism industry earned $400.7 million in January this year, a 17.2% increase from the previous year, signaling a strong recovery in the sector. Sri Lanka's tourism industry earned $400.7 million in January 2025, marking a 17.2% increase compared to $341.8 million in January 2024. The latest data from the Central Bank of Sri Lanka highlights a positive growth trend in the sector. The Sri Lanka Tourism Development Authority reported 232,341 tourist arrivals between 1st of February to the 27th of February 2025. This brings the total number of arrivals for the year to 485,102 by February 27th. In comparison, the industry has generated $362.1 million in December 2024. The central bank also reported the total tourism earnings for 2024 reached $3,168.7 million, a significant 53.2% increase from $2,068 million in 2023. The growth reflects an ongoing recovery in the tourism sector following recent challenges. These figures underscore the continued support of tourism to the Sri Lankan economy. The industry remains a key driver of foreign exchange earnings and job creation in the country. Moving forward, authorities are optimistic about sustained growth in tourist arrivals. The Ceylon Chamber of Commerce congratulated the government on successfully completing the third review under the IMF Extended Fund Facility Agreement. The IMF board's approval and subsequent disbursement will provide vital support for Sri Lanka's economic recovery. The Chamber highlighted the realization of two key priorities from its 10-point focus plan: external debt restructuring and the implementation of fiscal policy changes in the 2025 national budget. As Sri Lanka enters the second half of its IMF program, the Chamber urges the government to accelerate structural reforms for sustainable growth. Key priorities include trade facilitation reform, advancing digital infrastructure, and enacting the Economic Transformation Act. The Chamber remains committed to collaborating with policymakers to drive these reforms and foster long-term economic growth. Let's take a short break now. This is a Nightly Business Report. Welcome back to the Nightly Business Report. The Colombo Stock Exchange ended the day lower following last week's positive momentum. Both the All-Share Price Index and the S&P SL20 indices experienced significant declines, indicating cautious investor sentiment. For further insights, we speak with Derana from LOLC Securities.
Thanks, Sanuvi. The SPI dropped by 311 points during the course of the day, reaching a level of 16,167 points. The S&P SL20 also showed a similar decline, dropping by 103 points to 4,828 during the day, showing a limited turnover of 1.5 billion rupees. The S&P SL20 index witnessed an early selling pressure, possibly due to profit-taking investor sentiment, and the index kept falling throughout the day, showing widespread selling in the top 20 blue-chip stocks. The highest ever decline for 2025 for the S&P SL20 was recorded today, with a loss of over 100 points by the end of the trading day. The SPI also started above 16,500 but quickly dropped, indicating early selling pressure, which was mainly due to profit taking by investors. The index continued to slide without any other significant recoveries. By the end of the session, the SPI was nearing 16,200, showing no signs of a late session rally. Negative contributors to the day were HNB, Melsta Corp, and Bukit Dara. The top three gainers for the day included SMB Finance PLC non-voting, UB Finance, and Nations Trust Bank PLC non-voting, while the top losers for the day included Vatavara Plantations PLC, Tess Agro PLC non-voting, and Bukit Dara PLC. Thank you.
The market started the week weakly, with the ASPI showing a decline and the S&P SL20 continuing its downward trend in the first 2 days. However, as the week progressed, the market regained strength and momentum, closing on a positive note. For further insights, we speak with Imashisella Peruma from LOLC Securities.
Thank you, Sanavi. Corporate earnings showed a significant performance in the December 2024 quarter, with total market profits reaching to 227 billion rupees. This was a 20% year-over-year increase from compared to 118 billion rupees, which was reported last year same quarter. A key driver of this growth was the robust profitability reported by the banking sector, which delivers significant returns to investors. This surge was largely because of the impairment reversal recognized by the banks following the SLISB restructuring. Investor confidence has seen a notable uptick since the beginning of the year, fueled by positive macroeconomic outlook and the successful completion of the country's debt restructuring process. With the high corporate earnings and positive macroeconomic sentiment, the investors realized their gains following the IMF third review news, which was announced last week. We can expect the market to move sideways as investors are absorbing their profits, especially in banking sector counters. However, with the strong external sector data, improved PMI, increasing tourism arrivals and earnings, also with the deflationary pressures reported in the month of February for CCPI, we expect the consumer goods, construction and tourism sectors to be more attractive to investors. Also, as treasury yields and interest rates are declining and the increase in the withholding tax in increase in the withholding tax, the equity market will be more attractive to investors as the capital market gains are exempted from the withholding tax.
Gold prices edged higher in Asian trading today, supported by a weaker dollar and growing uncertainty surrounding US trade tariffs and geopolitical tensions. Spot gold rose by 0.3%, reaching $2,865.69 per ounce, while April gold futures gained 0.9%, settling at $2,873.59 an ounce. The upward movement came after US President Donald Trump announced additional tariffs on China and reaffirmed plans for 25% tariffs on Mexico and Canada. However, U.S. Commerce Secretary Howard Lutnick indicated that Trump would determine the exact tariff levels on Tuesday, adding to market uncertainty. Geopolitical concerns also weighed on the investor sentiment, with stalled Russia-Ukraine peace talks contributing to fears of prolonged instability. As a result, gold's safe haven appeal continued to attract investors seeking stability amid the ongoing trade and political challenges. Oil prices rose in Asian trade today as doubts over a US brokered peace deal between Russia and Ukraine invited a bigger risk premium as it signs a strains in Israel-Hamas ceasefire. Brent oil futures expiring in May rose 1.1% to $73.57 a barrel, while West Texas Intermediate crude futures rose 1.1% to $70.11 a barrel. Oil also benefited from some bargaining buying after tumbling through late February amid a storm of negative factors. Prices still remain close to their weakest levels for the year. Oil prices were nursing 6 straight weeks of losses as concerns over increased US tariffs, which could potentially disrupt the global economy and hurt demand, battered crude markets. But heightened geopolitical tensions lent some support. The Sri Lankan rupee has continued to appreciate against the US dollar today, marking an improvement compared to last week. According to the Central Bank of Sri Lanka, both the buying and selling rates for the US dollar have decreased, signaling a positive shift for the local currency. While the Sri Lankan rupee has generally experienced depreciation against a range of foreign currencies, let's take a closer look at how the Sri Lankan rupee is performing against other major global currencies. A short break now. This is the Nightly Business Report. Welcome back. John Keel's Properties and Indra Traders celebrated the completion of Trizen, Colombo's largest residential development. The 897-unit complex in Union Place blends technology and modern design, offering residents world-class amenities.
John Keel's Properties and Indra Traders recently celebrated the completion of Trizen, Colombo's largest residential development. The 897-unit apartment complex located in Union Place is a testament to modern urban living with a focus on technology, accessibility and design. The ceremony held on the 52nd floor rooftop was attended by key dignitaries including Nayana Moulimata from John Keel's Group and Rushanka Silva from Indra Traders. Trizen features a wide array of amenities including 2 swimming pools, a rooftop cinema, gymnasiums and a jogging track, making it a vibrant community for its residents. Nayana Moulimata expressed pride in realizing the vision of redefining urban living despite challenges like the COVID-19 pandemic and Sri Lanka's economic difficulties. Rushanka Silva highlighted the collaboration between Indra Traders and John Keel's Properties, transforming the land once owned by Indra Traders into the iconic development it is today. The project's success is also attributed to the resilience and the dedication of the teams behind it, including architects and contractors. Trizen has already begun welcoming residents and is set to redefine living standards in the heart of Colombo.
TVS Lanka continues to lead Sri Lanka's two-wheeler industry by manufacturing a full range of motorcycles, scooters and mopeds with local value addition. The company's state-of-the-art assembly facility, commissioned in 2021, was built with an investment of over $500 million Sri Lankan rupees. TVS Lanka's commitment to domestic manufacturing aligns with Sri Lanka's economic recovery, providing sustainable and cost-effective mobility solutions. CEO Geethal Anthony highlighted the company's efforts to combat rupee depreciation and develop a local component manufacturing ecosystem. TVS Lanka's operations support local businesses, generate employment and offer international training opportunities for Sri Lankan youth and skilled professionals. With over 30 years of presence in Sri Lanka, TVS Lanka has earned numerous accolades for its mobility solutions. The company continues to provide innovative products and services through an extensive network of over 2,000 touchpoints across the island. Brandix Corporate Campus is Sri Lanka's premier institutional for apparel and textile education, has formalised a strategic partnership with RMIT University, Australia, to offer students a seamless pathway to advanced global education.
Brandix Corporate Campus has partnered with Australia's RMIT University to offer students enrolled in Advanced Diploma in Fashion Apparel and Textile a unique academic pathway. Upon completing their coursework at BCC, students can transition to RMIT's campuses in Australia or Vietnam to continue their studies. They will have the opportunity to enroll in the Bachelor of Fashion Enterprise program, with the first year of the 3-year degree exempt for ADFAT graduates. Brandix Managing Director Hasita Premaratna emphasized the partnership's role in expanding Sri Lanka's youth skills and promoting local talent on the global stage. RMIT School of Fashion and Textile Dean Professor Alice Payne expressed excitement about collaborating with Brandix to develop future leaders in the industry. This collaboration benefits the Sri Lankan apparel sector by providing students with global exposure and enhancing their technical skills. The partnership is timely as the demand for skilled professionals in fashion and textile technology continues to grow worldwide.
Samsung Insurance Brokers has appointed Nimal Balavardhana as Executive Director, marking a significant step in the company's expansion, particularly in life insurance brokering. Balavardhana brings extensive experience and industry connections, having served as a senior financial service consultant at AIA from 2005 to 2024. His professional qualifications include a certificate in personal financial management and membership in the $1 Million Round Table. Under his leadership, SIB plans to broaden its offerings and introduce new services to strengthen both the general and life insurance segments. DSI Samsung Group Director Nalini Rajapaksa welcomed Balavardhana, highlighting his potential to drive growth in SIB's life insurance and create synergies with the general insurance business. Balavardhana expressed excitement about the future and the continued growth of SIB. Omega Line Limited, one of Sri Lanka's leading exporters of clothing items to the European market, recently marked 25 years of excellence, contributing significantly to the nation's economic growth.
Omega Line Limited, Sri Lanka's largest exporter of clothing to the European market, recently celebrated 25 years of excellence. Omega Line, a wholly owned subsidiary of Automotive based in Verona, Italy, manufactures well-known brands. The company has invested over $400 million in Sri Lanka, exporting more than 200 million garments last year. Automotive's president highlighted the significant growth since humble beginnings with 30 employees. Omega Line CEO Felix Fernando credited the company's success to hard work of key figures and the trust placed in Sri Lankan operations. The company continues to expand, with the new factory under Benji Limited expected this year. Omega Line's remarkable achievements underline its vital role in driving the Sri Lankan economy and contributing to its global export reputation. The company's ongoing investment in technology and infrastructure ensures continued growth and sustainability in the apparel sector.
The Institute of Chartered Accountants of Sri Lanka has launched its transformative 2025 curriculum, signalling a shift in the role of chartered accountants. The new curriculum focuses on developing chartered accountants as strategic business leaders, technology-driven professionals, and ethical communicators, with an emphasis on AI-driven financial analysis, data analytics, and automation. The curriculum prepares accountants to lead in a rapidly changing business environment. It integrates integrity, power, and enabling skills, ensuring that professionals can drive innovation and change. The curriculum is structured across 3 levels: business, corporate, and strategic, offering a clear progression from foundational knowledge to advanced application. This approach aligns with international standards and equips chartered accountants to lead with trust, think strategically, and communicate effectively. Let's take a short commercial break. Global business updates coming on the other side. This is a Nightly Business Report. Welcome back to the Nightly Business Report. Asian stocks rebounded at the start of the month following a strong finish on Wall Street last week. Chinese shares rose, driven by positive factory activity data. Investors awaited US President Donald Trump's decision on trade tariffs, though uncertainty suggested the possibility of softer measures. Japan's Nikkei 225 rose 1.4% after a 3% drop in the previous session, while Hong Kong's Hang Seng Index gained 1.8%. Indonesia's Jakarta Stock Exchange surged 2.2% and the Philippines' PSEI Composite rose 1.1%. China's Shanghai Composite and the Shanghai Shenzhen CSI 300 both saw gains of 0.7% and 0.8% respectively. Global markets are closely monitoring trade developments which could impact investor sentiment and market trends in the coming weeks. The optimistic data from China's factory sector also provided a boost to investor confidence in the region's economic recovery. Adidas' success this year hinged on attracting more American shoppers from Nike, analysts say, as the brand seeks growth beyond its iconic Samba and Gazelle sneakers.
The key to Adidas's continued success this year is whether it can win more US shoppers from market leader Nike, analysts said. That's as the German brand looks for new sources of growth beyond its Samba and Gazelle sneakers. There's uncertainty over whether consumer demand in China will recover, and it's prompted many brands, including in the luxury sector, to focus on US shoppers as a growth driver for 2025. In pursuit of this, Adidas recently partnered with LA brand Sporty & Rich for a collegiate Americana line, and also collaborated with US musician Pharrell Williams and 2 US athletes. CEO Bjorn Gulden has turned Adidas around since it cut ties with rapper Ye and scrapped the Yeezy sneaker line in 2022. And shares in Adidas have risen 160% since Gulden's appointment was announced the following month. Investors expect him to ensure Adidas keeps gaining market share from Nike, while also fending off newer sportswear brands like On Running and Hoka when it reports full-year results in March. Data showed Nike's share of the global sportswear market fell to 14.1% last year from 15.2% in 2023, while Adidas's market share increased to 8.9%. from 8.2%, with other gainers including New Balance, On Running and Hoka. Overall, Adidas sales grew 19% in the quarter to the end of December and 12% over 2024 as a whole. However, Nike sales were down 9% in its quarter ending November the 30th last year. An analyst said Adidas's overall sales should keep growing by at least 10% annually, as long as Nike is struggling.
British Airways owner IAG reported a 27% jump in annual operating profit, beating market expectations as it curbed costs and growth in its lucrative transatlantic routes took off.
British Airways owner IAG reported a 27% jump in annual operating profit on Friday. The numbers beat market expectations as the company curbed costs and growth in its lucrative transatlantic routes took off. European airlines overall have struggled in the past year with spiralling costs and delivery delays. IAG, which also owns Spanish airlines Iberia and Vueling, said it was confident about delivering margins and returns. The group said it plans a $1 billion share buyback. That was after announcing an annual operating profit of $4.62 billion. In stark contrast to other European airline stocks, IAG shares have soared in the past year. They were up around 5% in morning trade. The group has benefited from limited delivery delays, strong demand and resilience in its core transatlantic routes. IAG pointed to possible plane delivery delays this year from Airbus and Boeing. It also said it's looking to put in an order for another round of wide-body planes. Lufthansa and Air France KLM report their full-year results next week.
That's all from us on the Nightly Business Report for today. We'll see you again tomorrow with the latest updates in the business globe. Until then, I'm Sanimutha Nayaka. Thank you for watching and have a good night.